Thank you so much for joining us. We are talking about mortgage terms and conditions. Now, you must be brave to join a webinar where we talk about mortgage terms and conditions. Now, I do trust that you will learn quite a bit from it. I've certainly compressed the topic quite a bit because it is not the most sexy topic you can ever talk about. Mortgages by themselves are not sexy, and then when you talk about mortgage terms and conditions, it's a different and lower level of boring. So I totally get it. But again, hopefully you'll learn lots from it. Again, my name is Jacques Dupree. I'm the principal broker of Mortgage Allies. Okay, so mortgage terms and conditions. So before we do that, let's just make sure we understand what we're really doing. This is part of our mortgage life cycle costs series. Okay, so what does that mean? It basically, I'm pointing out that there's a difference between something's sticker price and its life cycle costs. So here's a good example. You go to the store and you look at a pair of shoes, and the one pair of shoes costs you $90 and the other one costs you $550. Which is the most expensive pair of shoes? And most people are like, Jacques, if you ask that question, please don't be my mortgage broker because you can't do math. And while I respect your comment, there may be more than meets the eye. Here's why. Okay, so if we take that pair of shoes for $90 and the other one for a mammoth $550, well, guess what? The sticker price is significantly lower than this one, right? But this one, you would have to replace every single year a new pair of shoes. These ones, when it comes to men's shoes, will be resolable, okay? So every 3 years, I put a pair of new soles on, and guess how long these will last me? 20 years. So when you look at the life cycle cost of these shoes, they are minuscule in cost compared to these ones. Okay, so in other words, even though the sticker price may look, wow, that's crazy expensive, if you take the life cycle cost of the more expensive sticker price shoes, they're actually a lot cheaper. And guess what? It is no different in mortgages. Okay, and what you also may not know is there's actually a way of knowing that that a low rate mortgage is not necessarily the cheapest mortgage. So let's see. All right, hopefully that's a good introduction to you. Right, so what are mortgage life cycle costs? Mortgage life cycle costs are additional non-interest costs. So now it's not your interest rate causing it, okay? That you could, and in fact sometimes will incur during the mortgage term. When I say mortgage term, the next 5 years, 3 years, whatever length mortgage you have, okay? These costs are indistinct. In other words, you can't really see them. It's just like the pair of shoes, like, what's gonna happen? How long are they gonna last me, right? You don't know that, right? They're indistinct. They usually incurred later in the term. So when you get the mortgage, it's like, oh, this looks great, right? And their severity depends on the lender type, the loan terms and conditions, the product, the interest rate, blah, blah, blah. Okay, and so this is now number 13 in this series of things that could actually make your mortgage more expensive. Okay, so mortgage lifecycle costs can significantly exceed the comparatively small interest savings of an enticing but limiting slightly lower interest rate. And we'll talk about the enticement in a second, okay? And so here's what we say. I truly believe that interest rates are a massive distraction. And I can seriously justify why I say that, okay? Because as a mortgage broker, what we call status, meaning I'm going to get the best rates from most of the lenders out there, we are obligated to give you our best rates, okay? And so to ask about a rate, and we'll talk about that a little bit more, is kind of, you're not going to get orange juice from a cow. You're going to get milk, okay? And so people always consider they're going to get, orange juice from a cow. When they ask a mortgage broker for a rate, they're going to get some horrible rate, and it's almost, you can't. So what you got to be careful of is terms and conditions. So what? By over-focusing on interest rates at the cost of the rest of the mortgage details, you can incur significant but potentially avoidable mortgage life cycle costs. Okay, and I've literally, for lack of a better expression, hammering this point like you won't believe. Okay, so as I said, you can easily be distracted by interest rates. So why? How can I say that? So watch this. This is very important. Okay, Canada's largest banks are what we call a saturated oligopoly. I know, like Jacques, stop with the terms, man. Come on. I know, but I gotta explain this to you, right? So I'm not a marketer, but I've learned this. In a monopoly, we always understand, most of us understand that a monopoly, one entity controls everything. Okay, and that's not healthy at all, right? No competition. Well, guess what? An oligopoly is kind of similar. So what happens in an oligopoly is you may have very few, but very key here, very large and powerful interdependent businesses that usually don't risk competing by price. Okay, in other words, these are all so big and they know if they start competing like with a price war, it's basically a race to the bottom. They'll drive each other like into the ground. So what an oligopoly, this is for real, what they do is they don't compete by price. In mortgages, we call it interest rates. That's pricing. We call it mortgages. So how do they compete? They compete by image and retention. What I just said there, if you understand that, you're like, what? What are you talking about? Are you serious? Yep, you'll see in a second. Okay. So in other words, they don't compete by price. Okay. How do we know that? Right. So if you look at all your banks' websites, guess what? Pretty much all the interest rates are very similar. Okay. And guess what? Also, they publish them like it's candy. Oh, yes, everybody, you can see it. But here's the key though. How much education have you received? How much of the education on their products in terms of conditions are freely available, like interest rates? Not much. Okay. And so where's the retention power for the bank? The retention power for the bank is in the terms and conditions and the product. Okay. So if we understand that the retention power, a bank competes by retention power, not by interest rates, why are we over focusing on interest rates that are freely available and the bank is not competing against, right? Yeah, or with. So why would we do that? So shouldn't we rather ask more questions, right? And about the products that we're getting? Shouldn't we ask more details about that instead of focusing just on interest rates? What most people do is, I would say to you, and I'm trying to be kind, the majority of phone calls I get from non-existing clients are literally, they might not even mean their name. They'll just say, what's your interest rate? That's it. And if you try and educate, you can hear them gloss over like, oh, this is boring. And so I think people are so used to just being told that it's all about the rate, they don't believe anybody else says anything else. So, what we need to do is focus on the product, and so the life cycle cost. So this is number 13 in our articles. We talk about terms and conditions. Terms and conditions you'll see are a rabbit hole, okay, and you'll see why they are actually, in my opinion, quite dangerous, right? And so we draw your attention in these articles to the life cycle costs associated with a mortgage. All right. So, mortgage terms and conditions are pretty boring. I don't know about you, but I can tell you, when I got my first mortgage in Canada was in 2001, I think it was. I bought a house, and for me, I found the mortgage process boring. I found it very repetitive, and it was just like, oh, I got to sign another document now? What are you talking about? Right? It's just like sign. So basically, you just do as your lawyer and your bank gives you documents to sign, you just sign them, and off you go. All I cared about is can I afford my house or can't I afford my house? That's all I did. And so I didn't, cost of borrowing documents and standard charge terms and mortgage loan agreement and privacy agreements, all that kind of stuff. Did I care about that? To be frank, no. Should I have? Probably. But let me. Hopefully, I can save you from the same things, right? So again, it's a vast topic. Your mortgage terms and conditions is a very, very vast, and not only it's a boring topic. Okay, And so most people will probably not read everything I'm writing here. So basically, I'm going to really just make it very simple in a sense. I'm going to focus on two things here, okay? Two main kind of groups. I'm going to focus on going beyond the numbers, okay? So most people will look at the mortgage agreement and or the mortgage commitment, they'll say, yep, I got to rate this and I got the payment like this, boom, off we go. And I'm trying to show, hey, wait, there's something more that you should look at than just rates, okay, or payments, and then kind of show you where you should look. I find this very frustrating, okay? Like when you go to your lawyer and you sign documents, you're on the clock, right? So sign here, sign here, sign here. And we're like, okay, what is important here? What is not important? So I got to be careful. I don't tell you what is important, what's not important, because some of the things are hidden somewhere. And so you should look at everything. But I found the process of signing mortgage documents, typically at closing, is, oh my gosh, I do not, what should I really be looking at and what should I not, right? So I got to put my disclaimer in here. I am not a lawyer. I'm not trying to give you legal advice, okay? And basically, I'm discussing with you my anecdotal, experience when it comes to mortgage documents and also as a mortgage broker, okay? So I'm not trying to give you legal advice on what's the best term here or something like that. I'm only a mortgage broker, and I'm trying to educate you when it comes to that. Okay, so let's start off with pointing out a few things that I bet you may not have known. And it may even annoy you, and it may even keep you awake at night. Maybe if you're a geek like me, it would, but I think it's important to understand. So here's a few things that you may not have known. Okay, legal representation. So you buy yourself a house. I'm talking about, by the way, in this whole entire article, I'm talking about National Housing Act approved lenders. I'm talking about A lenders or prime lenders. I am not talking about private lenders or, mortgage investor corporations or anything like that, or alternate lenders. I'm talking about AAA best of the best lenders, okay? So when you buy a house, guess what? You have to get a lawyer, right? To close the mortgage. So you get a lawyer, but here's what you may not have known. You're paying for that lawyer, right? Well, guess what? That lawyer may not be representing you, okay? Or at best, they're representing you and the lender. But in some cases, they represent the lender only, even though you are paying for the lawyer. Okay, so not about you. It's a bit like, God forbid you get into a car accident and you're going to see a lawyer and you're kind of paying for the lawyer, and you kind of find out, hey, this lawyer is representing the person I just had an accident with, right? And, I'm not suggesting banks are like an accident, but I'm trying to illustrate the concept, okay? Is you kind of think like that if you pay for a lawyer, they should represent you, right? Makes sense. Well, your lawyer will take instructions from the lender. Very important, that, right? And so it's the lender's money. So the lawyer is taking instructions from the lender. They got to do what the lender says, okay? Otherwise, it's not happening. Okay, hold on. What are you talking about now, Jacques? All right, so let's go to the next one. Okay, so here's what I always find amusing when mortgage brokers say, or mobile mortgage reps that works for banks say, hey, listen, come to us. We will negotiate your mortgage contract. And I go, really? No, you're not. Okay, because mortgage contracts are not negotiable. Okay, you may just not like the bank and then you must leave. So in other words, all we do as mortgage brokers, we look for the best mortgage. Well, this is what this one does. This is what this mortgage broker does. I look for the best mortgages there, but I can never go to a lender and say, oh, by the way, that paragraph 3C, I need you to take that out of this contract for that client. Never going to happen. Okay, never ever going to happen unless you're a gazillionaire client, but then you don't need a mortgage. Okay, so I have never seen a bank take out a term or condition or change it for one client. It's never going to happen. So what's the problem with that? It is a one side. This is not what I say. This is you can see there's a case law going on saying that the problem with mortgages are they're totally one-sided. Right? In a fair, if I was buying a bicycle from you, okay, and that means we have equal bargaining power, and you realize like, no, Jacques, you can't I need you to pay for this. And I'll go, whoa, hold on. If you add another spare tire to the bicycle, I'll be able to do that. So we negotiate. We've got equal bargaining power, right? In mortgages, it is not the case. It is a one-sided agreement completely. Therefore, you have situations where a lawyer could represent you both, because the bank's saying like, well, if you don't do what I'm saying, you're not going to get a mortgage. Okay, it's like clients sometimes say to me, Jacques, I really don't want to give you my SIN number, and I go, you probably don't have to, but the bank doesn't have to give you a mortgage either. So it's kind of like, it's a one-sided agreement. It's very, very important to understand that. Okay, it is not a like, I can do my own thing and negotiate things. It's not the case here. By me saying this, I'm not suggesting that there's a boogeyman out there at all. I'm just saying to you, you need to be aware, and I need to be aware, it is a one-sided agreement. The other thing, there is a massive imbalance of power, okay? Well, if you ever, I hope you never ever get to there, but if you ever have a grievance about against a big financial institution and you want to go for litigation, well, good luck with that, right? Because you could hire one lawyer, but there's like banks have gazillion resources and lawyers and legal staff. You can, it's so hard to even make a dent in that, and that's why. Let's just say you have a grievance about your mortgage penalties, and you totally think it's unfair, and you've paid like $30,000 in penalties. Well, if you try and litigate, if you try and go to court with that, oh my gosh, before you blink, you've hit $30,000, right? And so you have other recourses to, like, you can complain to the ombudsman and stuff like that, or to the lenders, like avenues. But you do not have the same power as a financial institution. There's not even a chance you have the same thing. So what I'm saying to you is anybody who thinks that they can take on, I'm not suggesting you should do that. I'm just trying to illustrate the point. Like, we can negotiate. I don't think so. Okay. So the other thing is, so that we talked about this, I know it's like quite an intense topic, but the next thing is, let's talk about disclosure and details. Okay. So you get all these documents, right? So is that disclosure? Well, here's the thing, right? As a mortgage broker, I am responsible for what's called suitability, okay? I am not allowed to give a client a variable rate when they explicitly told me they wanted a 5-year fixed, okay? I can't do that, all right? And so I'm also responsible for a fiduciary for the lender, meaning a trust relationship. I'm not going to lie to the lender, and I'm not going to give them a bunch of garbage that damages them, right? That's what I'm responsible for. So, and although I try my best to protect my clients against poor mortgage terms and conditions, here's the key. Your lawyer is the only one qualified to legally interpret mortgage terms and conditions. So in layman's terms, if a client comes to me and said to me, hey, Jacques, can you please go through all my standard chart terms with me? I'm going to go, I'm sorry, I'm not that person. Why? If I was your buddy and we could possibly do it, but I could never be, as a mortgage broker, you could never like, oh, I'm giving you advice as a non-mortgage broker. You are a mortgage broker. Once you're licensed, whether you go to play soccer tonight and you go somewhere else, once you give advice, you are still basically on the hook for that advice. Okay, so in other words, a client has to go to a lawyer to interpret their terms and conditions, right? Okay, so, all right, now let's just say we do that. Well, guess what? You can look at what lawyers' rates are. Let's just say if you're lucky to find a lawyer at $300 an hour, guess what? You're going to have to pay the lawyer for every single hour that you sit with a lawyer to go through those terms and conditions. They'll be very happy to do it with you, but it'll be extremely costly. So, in other words, what does that mean, right? That adds again to the imbalance of power. So unintentionally, it adds to the imbalance of power and the one-sidedness of mortgage agreements, right? So you got to be understanding, when you sign documents at a lawyer, you're probably not going to understand anything what it says there, right? But if you want to understand, guess what? You're going to have to pay the lawyer to go through every single line with you, right? So you can see it's kind of like, hold on, did somebody put the genie back in the bottle, right? It is kind of crazy. Now, here's the next one about that, all right? Disclosure. When I get a mortgage approved, it's my goal, my brokerage's goal, to meet with my clients within the conditional finance period if it's a purchase, or as soon as possible with a refinance or something like that. Why? Because I want to go through the terms and conditions with the client in the mortgage commitment so they can understand it. And if they don't like what they see, they can say, bye-bye, I'm not doing this anymore, right? Here's the problem though, okay? So let's just say you buy a house today, we put the application in tomorrow, and in 2 days' time we have an approval and we meet, okay? That's just your mortgage term, your mortgage commitment. But your mortgage commitment will reference a whole bunch of other documents in there, such as your standard charge terms, your mortgage loan agreement, and what's the other one I'm looking for? Anyway, those you will only see at the lawyer, okay? 2 days before the closing date. Well, guess what? If you don't like what you see at the lawyer, what are you going to do about it? You're closing in 2 days' time, right? So like, oh gosh, what happens now? So again, very much an imbalance of power. And I'm going to tell you, that's partially caused by you and I as consumers. Why? Because banks are scared to death, and I'm exaggerating when I say scared to death, to get their mortgage documents all out in the market. Because guess what happens? We as consumers will walk from one bank to another bank and say, hey, could you match this? Right? And so they hold it close to their chest until close to the end. And so in a sense is, I always say, if you're buying a pair of shoes, go ahead and get yourself the best price. If you want to deal with financial stuff and expensive purchases like a house, I tell you what, work on a trust relationship. I always say, if you want the best mortgage you want to get, is treat your mortgage person. I'm not egotistical what I'm saying to you. This is what I do. My financial planner is somebody that I want to trust and have a good relationship with. If I smell a rat, I won't work with a financial planner because it's just too important, right? And so I'm saying these kind of, in a sense, inadvertent last minute disclosures are essentially caused by us as consumers because we are shopping things around all over the place. Okay, so yeah, you want to be competitive 100%, but I'm just looking at another screen if I look to the right here. But I always say, if you're going to be buying an expensive purchase, I think you should focus on trust more than quote unquote the lowest price. If you build trust, you're going to get a lot more, I think. Okay, so again, very last minute disclosure. So what are you going to do about it, right? There's not much you can do it. And the next thing here is you are going to get terms and conditions sheets given to you. All right. And so, okay, so you can read them and say like, oh yeah, you are not allowed to do this. Okay, great. The problem is this, right? Is those terms and conditions that you read, you don't know their application necessary, or the consequences are typically vague, situational, and unexplained. In other words, if I told you today, here's an example, oh, you've got a collateral mortgage, and you go, okay, that's okay, right? Well, guess what happens? In 2 years' time, you're trying to put a line of credit on your house. Guess what happens? Nope, can't do it. What do you mean I can't do it, right? Or in 5 years' time, you're trying to switch your mortgage to a different lender for a better rate. Nope, going to get a higher rate because you have a collateral mortgage. What do you mean, right? So when you got the mortgage, I always say to clients, this is your kind of when you want to get the mortgage. Yeah, everything sounds great. Terms and conditions typically play out here, and then you can do nothing about it. It's too late. Okay, so that's what I'm saying to you is details matter. Okay, and so they really do matter in mortgages. All right, you guys okay there? How are we doing for time? Not too bad. All right, so it's very easy to get lost in mortgage terms and conditions. Very easy. Like you sign documents. Where does this fit in? What is that about? How does this work? And how does it not work? And so what I'm going to do is just give you a little bit of a roadmap of where you should look. Okay, and I'm going to keep it very simple. So just again, I'm dealing here with National Housing Act approved lenders. So the best of the best prime lending lenders. Okay, because it is different when you start going to the more in the private mortgage world. Okay, when you're talking about the roadmap here, we're starting with the very first document that if your mortgage is approved, you're going to get a mortgage commitment. Okay, and the expiry date of the commitment very often is on the closing date. The closing date is the day that you, if it's not a new construction, is the day that you're going to move in the house and you get your keys, or the registration date. Okay, and normally, as I said to you earlier, we want to make sure that we meet with you ASAP. And if your lender does it, you should really question it. Okay, they should meet with you within a day or two. For arguments, I got clients that bought on Friday. They have a conditional finance tomorrow. We've all approved. We're meeting tomorrow to review so that they can have an access point if they don't like what they see. Okay, so timeline, you want to meet short after the mortgage approval. Okay, now that mortgage commitment is typically the document that'll point out the other terms and conditions. It'll have its own set of terms and conditions, but it'll also reference a whole bunch of other terms and conditions. And you may just see one word and you're like, yeah, whatever that means. But that little word is really, really important. Okay, so your mortgage commitment, and it differs from lender to lender. Okay, but an example I use, you will have essentially, a whole bunch of sections, but it'll do the following. It'll give you the conditions of the mortgage approval. Okay, those are the things that you need to fulfill before the closing date, and those are the things that we drive you crazy about: supporting documents, employment letters, pay stubs, where did you get the funds from, blah blah blah. That's where that's called out. Okay. Next thing is it'll tell the lawyer what to do. Okay, not all of it, but some of it. It'll say, for argument's sake, the lawyer is supposed to check that it is an owner-occupied property, or it is what you said is going to be. Okay, it's going to tell the lawyer. Let's just say you decided to pay your Visa card out. It's going to tell the lawyer to do that. Very often, almost every time, there's some identity issues. Like if you're, folks like me, I'm Jacques Dupree. Most people typically butcher my last name and my first name, so the lawyer is to check if I'm really me. Okay, that's what the lawyer is going to be doing. All right. And the next thing that's going to happen is, and this is really important, is general conditions and information. This is going to reference a whole bunch of other documents which you should not fall asleep to. You should ask what they're about. For argument's sake, it'll ask about the lender's privacy agreement. It'll talk about the standard charge terms. It'll talk the cost of borrowing disclosure statement. It'll talk about the mortgage loan agreement. Okay, it'll just say, but here's the key. It'll say you will sign those at the lawyer. All right, and that's like normally just a few days before you get the keys for the house. Okay, and then at the end, it'll actually have some standard charge terms. For argument's sake, it'll tell you that you need insurance. It'll tell you that the lender, what kind of lender they are, etc. So you get a lot of information, etc. in here. Okay, now inside there, as I said, is what you really want to be careful of. Now, most of you, if you've got a mortgage, you would have seen a mortgage loan agreement. So here is, I'm not going to spend too much time on it, but basically this is what a mortgage loan agreement looks like. Okay, so I've scrubbed this. It's very generic. So this client bought for $605,000, and they putting this much down payment down, and they've got this much mortgage. It tells you the closing date and all the kind of stuff in there, and it also tells you what kind of mortgage it is, what the rate is, what kind of transaction it is, and their payment and all the good stuff. And see, there's the commitment expires in the day because you get a loan agreement beyond that date. Okay, and so this is the underwriter's name here. Then the applicants will sign here. And remember the first part I was saying to you, I'm sorry, I'm going quickly here, but basically here's the conditions for the approval, right? So now it says the lender needs to ask for property taxes, and this is what the mortgage should be, and the pay stub and employment letters and insurance and all that kind of stuff comes in here. And there's the second applicant's salary and stuff like that. And then here you can see here's the lawyer, what the lawyer confirmed the identity of this person. The client said they live in this property, so he's going to make sure that they sign an affidavit to make sure that they live in it. And then here is the prepayment privileges, right? You can see there. And then here is watch. It calls out the standard charge terms. It gives you a little code there, okay? And inside here, it goes on, kind of looks very nondescript. And then you see here, it talks about the standard charge terms again, and it'll say you'll sign the cost of borrowing document. Here we go. The cost of borrowing document will be signed at the lawyer, and you will also be signing a mortgage loan agreement at the lawyer also. It's here somewhere in here, okay? So you can see it just goes through all of that stuff here, tells you if you misrepresentation, they can cancel a loan, tells a little bit about penalties, but not much. You can see there's not much in here. And then here it tells you like it's a National Housing Act lender, blah, blah, blah. So basically 5 pages. You know, some lenders have 2 pages, like some have just 1 page, and everything inside you should say that can't be. Like you can't just have, and it's true, you can't just have like 2 pages to mortgage commitment. There's a lot more to it. Okay, so I said that basically inside that commitment, it references standard charge terms, it references a mortgage loan agreement and cost of borrowing statement. Okay, so your mortgage loan agreement, okay, very, very key. You will sign it mostly at the lawyer. Okay, so again, just a few days before the closing date. Okay, and so what does a mortgage loan agreement look like, Rob? So this is what it looks like here. Let me go up here so you can see the bank's kind of logo will be here. Your name will be here, and you can see it right up here. It tells you what kind of mortgage it is, and this is where they go into the nitty-gritty. This is the document. You know, again, I got to be careful that I don't overemphasize some and underemphasize others. Okay, but if you know, this will give you a lot of details that you need to understand. Okay, so you can see it tells you what the mortgage amount is, when is the closing date, goes into a lot of detail here for you. Okay, tells you about the cost of borrowing, you know, right? So you can see here's your payment. When is the mortgage renewing? How are you paying the mortgage? This is amount of payments you're going to have, the total amount you're going to pay off over the next 5 years. And then this is very key. Now it goes into where in the mortgage commitment, it just gave you 3 lines for what it is. Here it goes into a lot of details now, okay? And what's really cool about this, if you're a bit of a numbers geek, you'll see it'll actually tell you how to calculate your penalties. And do not for 1 second think that banks calculate the penalties the same. It's like day and night, okay? So really, really recommend you go into this, okay? If you're not a numbers person, it's probably going to put you to sleep. If your significant other is a numbers person, make them suffer, okay? Let them go through that. And you can see here's your cost of borrowing, how much interest you'll be paying, etc., etc. And then here, you can just go through, is the mortgages insured or not? And it tells you what potential fees you could be paying. So in other words, if you're in Ontario and they need to do an appraisal, not the existing one, future, it could cost you that much. If you miss payments, for argument's sake, it'll tell you, then you're going to be discharge fees, there's that, so it'll tell you what the fees are. Okay, so if you do nothing quote unquote wrong or nothing out of the ordinary, you should not incur fees for a prime mortgage. Okay, and so here, mortgage and then mortgage discharge, blah blah blah, and then here, so this is key. There are various payment frequencies, and then property taxes, who's paying what, and all that kind of stuff. And then you can see lots of information here, right? Remedies, if people get into what is default, portability, very important. That assumability should come up also. Here we go. And then it should go into here. Actually, this is a variable rate mortgage. So how you can complain. And so it will actually go into how penalties are calculated also, right? So you can see here, this is lots of detail in here. Okay, and then obviously you sign this. So this is your mortgage loan agreement. So again, start with the mortgage commitment. Mortgage commitment will refer other documents, okay? Refer to other documents. So one of them it will refer to is the mortgage loan agreement, all right? So the next thing what it does is it will call out some standard charge, so I forgot this, SCTs, not STCs, okay? So standard charge terms. So what happens is every lender, so a set of standard mortgage terms, standard charge terms, or optional covenants incorporated into the mortgage by reference to their filing number. So basically, you know, in a nutshell, is these are the things that apply to typically all of these kind of mortgages for that lender. Okay, so in other words, instead of them having to write those all 12 pages in every single mortgage commitment, they put them into what's called a standard charge term. So what do these look like? They look like this. Okay, and so you can see they go by a code. So these are standard charge terms 201509. Okay, and you can see, it's mostly quite generic. And so you can see the borrower means the person of persons, enforcing, and it goes through that whole bunch of, normally there's not that much, because it's generic, right? It's very generic. It's standard charge terms. There's not necessarily, it's the same for pretty much all of their mortgages. So you got to go through this, but the stuff is the mortgage loan agreement. That's where the specifics of your mortgage are very, very important as well. Again, without neglecting this, right? And so you can see it'll tell you a bunch of information. I'm not going to go through the whole thing, but this would be like 12 pages, right? 12 or 13 pages. And so it'll tell you, for argument's sake, can you rent out this property, right? And what happens if you miss property tax payments, that kind of stuff. It'll tell you all about that, right? So still important, but it is the same for all of their mortgage, for that type of mortgage for them. All right. Hopefully this is somehow helpful to you. All right. So the next one is the cost of borrowing statement. That is basically if there are costs involved in the mortgage, the bank has to disclose that through a cost of borrowing statement. Okay. Now this mortgage loan agreement here is kind of a cost of borrowing statement at the same time. Now, there may be another one. So again, we don't actually, as a brokerage, we don't see the cost of borrowing statements. Sometimes we do, sometimes we don't, okay? But very, very few times do we see it. And you can see if you go up here, you'll see there is the cost of borrowing right here, up right here, not to bore you again, so as I said. So you'll see it, here we go. The annual percentage rate is the cost of borrowing right there, see? So it's kind of they've amalgamated both of them. So basically, what you need to know is your commitment, your mortgage loan agreement, standard charge terms, cost of borrowing, and there'll be a bunch of other documents that your lawyer have signed, but all of these are done right at the lawyer. So guess what? If you read through your mortgage loan agreement and you go, oh my gosh, I don't like that at all. Well, if you're closing in 5 days' time, nobody's going to give you a mortgage in 5 days and close in 5 days. Never. Okay? Because typically, if you look at every mortgage commitment, we say between the closing date, and when the file is completely done, 100%, baby is in bed and is asleep, we need 10 banking days here, the gap. Okay? 10 banking days for the file to be complete, right, before the closing date. So you can see inside here is danger zone. I always say to my clients, you can make changes to your mortgage, no problem, but I always say like 15 days, don't mess with your mortgage. So 5 and 10, so there's like total 15 days here, okay? I always say now you're getting into the danger zone, right? So don't start making a whole bunch of things now and stuff like that. That's why I kind of joke with my clients, a mortgage is supposed to be boring. When it gets exciting, there's something wrong. Okay, so what we try and do is we keep it boring. Is we ask you for a bunch of documents right up front, so we can get those documents to the bank, and they can sign off on those conditions before you have to waive your conditional finance. Okay, or at least if you don't have a conditional finance, you have time to react or to make changes or to move lenders or whatever else you need to do to protect yourself. Okay, so for me, all I'm trying to do with this article really is to alert you that mortgage terms and conditions are important, okay? And that you will investigate, this is very important, that you'll investigate your terms and conditions while you're looking for a mortgage product. Don't still do it, but the best time to look for mortgage terms and conditions while you investigate a mortgage product. And here's what I'm going to say this to you. If there's so many people, and I'm not saying it's a bad industry. I'm not at all. I mean it. I mean, my gosh, I'm just saying to you, if a mortgage professional, bank or broker, is not prepared to educate you, I would be careful, right? If their sense of education is emailing you an interest rate, I would be careful, right? So I would be seriously, like I always say, how somebody treats you now is probably how they will treat you in the future. Okay, we are very consistent as human beings. Okay, so I always say is if they prepare to educate you, then you're probably going to get a good product as well. Okay, so very important to understand that. Okay, and then that's pretty much it. So mortgage terms and conditions, be aware of them, know where to find them, look for them. It's very hard to understand them if you're not in the industry. I'm going to tell you that now. Okay, so you'll see next week we are digging into another topic when it comes to mortgage terms and conditions. We'll talk about them in a second. So what I normally do is I do a breakdown of the markets just a little bit. Okay, so fixed rates is, so if you remember, if somebody tells you, oh my gosh, the government's going to move rates again, okay, what's the first question that should come out of your mouth? What rates are you talking about, my friend? Okay, and why? Because the government does not change fixed rates. The market does. The government does very much affect variable rates because they change what's called the policy rate or the overnight rate, and those directly affect the prime rate, which directly affects your variable rate mortgage. Okay, a fixed rate mortgage is affected by the market, and here is what it looks like. Okay, this is 2 days ago. Okay, so what happens is, see the yellow here, that is 2 years. The pink is 5 years, and 3 is purple. Okay, so you can see here, when you look at that, that is not the fixed rate. We add between 1 and 2% to that. So like, Jacques, could you be more specific? No, because it varies between banks, okay? And so you can see this is how we determine fixed. So you can see here is where we were nice, and rates have definitely increased in the last week or two. Okay, you can see that there. And you can see down here, we're going down to like COVID. And so you can see this is all inflation and stuff just going up here. So it's really important to understand also something else. Normally, we have this. You have shorter terms. So let's just say a 1 year term and down to 5 year terms. 5 year rates would normally be higher than 1 or 2 or 3 or 4 year terms. Look at this. It's gone the other way around. Look, you can see here, the 2 year is higher than a 5 year. Okay, so it's weird. The market's really, really weird. And so what are our fixed rates at right now, roughly? Okay, you can see here, there is a 3 year fixed, right? 5.14. A 5 year fixed is 4.84. Is a kind of a range there. All right, so that's where the fixed rates are at right now, depending what you do in down payment, all that kind of stuff. Okay, so let's look at variable rates. So variable rates, again, as I said, they depend on the Bank of Canada's announcement for the overnight rate. So the last meeting was the 25th of January. We all thought they were not going to raise it. And then as we got closer to the 25th of January, we kind of realized they would. So they did increase them by 0.25. And the next Bank of Canada meeting, by the way, they meet 8 times a year, okay? And so the 8th of March, who knows what will be, but there are some people think that they may move it again. Now, I think the Bank of Canada said they won't, but so they did also for January. We hope they don't, but hey, listen, I'm so glad I'm not the governor of the Bank of Canada right now. That is for sure, okay? So this is what prime is sitting at, right? It's pretty crazy, right? So variable is actually, so the myth that people tell you, oh yeah, variable is always lower than fixed, is not true at all, okay? And so this prime, so you kind of average variable rates are between 5.8% and 6.3, which are quite a bit higher than fixed rates right now, okay? So that's what it looks like. So here's what basically the Bank of Canada, again, is the next date. And so this is where we started in 2021. Look at this. Now, this is not prime. This is the overnight rate, right? So that's what this is here. Okay, so inflation, I'm so glad this is coming down. Now, this is like, oh gosh, it's so much better than there. Oh yeah, but our target rate is 1%, right? So we still got a way to go from back to January 2021, right? So it was quite nice and low there. That's pretty much what I've got for you, except if you're interested in, I've got a little bit of bonus material here for you. I've got, so a lot of people, what's on a lot of people's minds right now is, oh gosh, Jacques, I'm sure a lot of people are defaulting in mortgages right now. Well, I got some really, really cool data here. Watch this. You'll really like this. Let me make it bigger so you can see it. Okay, so how many mortgages are actually in arrears? Now, disclaimer, I took the Canadian Banking Association data and I really matched it up to make it more presentable. They have really good data, so there may be some things that are not, that are like the disclaimers and stuff like that are not in here. But watch, they are 335 periods. So what they've done is they've tracked it from January 1995. Okay, these are mortgage arrears, not like for foreclosures or anything like that. Okay, so basically in January 1995 Canadian, and these are I believe these are all of the big banks, the big six banks. Okay, there's not every single lender in Canada, but these are the big six banks, I believe. So January 95, there were 883,000 mortgages in Canada, of which 4,777 were in arrears. Okay, and basically what I've done is I've ranked this. How does this rank with regards to an arrears for the last 335 months? Okay, and here what I said is, so what they've done is they've taken this as a percentage of the total. So they've taken the mortgages in arrears as a percentage of the total mortgages, and they're saying this 0.54% of mortgages in that month were behind in payments, meaning that's the 27th biggest amount in this period that is being measured. Okay, so let's ask the question, and like, how are we doing now, right? So like people are concerned, like, how are we doing now? Are we okay? Are Canadians okay? Well, if we go down, watch here, the highest defaults were ever since 1995 January were in 1996. Now remember, I said we measured 335 periods, right? So you can see this number 1, 2, and 3. You can see that was a tough period, 1996, right? It's very, I don't know about you, this gives me a lot of perspective. So if I go down more, and so this is by percentage in arrears, right? So if I go down and see when were the biggest spikes and the most mortgages arrear, right? So watch here, it's interesting here. If you go down to 2009, which is actually when I bought my house in Canada, it's interesting, watch here. In 2009, July, August, and in fact, that's exactly when I bought my house. Watch. This was the highest arrears mortgages for the last 350 months. Quite interesting. Okay, so how are we doing in 2022? So this goes to November 2022, okay? So watch, if I go all the way down here, I'm very encouraged about this. So all of the people are telling us that the sky is going to fall. I don't see it yet, okay? So watch, we're going down. Remember, we're measuring, you can see down here, we're measuring 335 times. Watch. This is number 322, right? So it's basically the least arrears mortgages, kind of close to the least arrear mortgages we've had in the last 335 months, which is not bad. Look at this here. Okay, so I'm very encouraged about this, and I hope it encourages you also. Okay, and so that's a good thing. Obviously, we don't know when people got mortgages in 2020, 21 at ultra low rates. How are they going to do when those mortgages renew? I do not know. But we do know there are a lot of people on variable rates that are extremely, got quite a bit. When they were at 1.25, those guys are now paying like 5.8. And we are still, very low arrears rates, right? So hopefully this is, so spread the news, I think Canadians are doing well. And I hope we continue to do well. All right. And you can see, look at the amount of mortgages here. We're talking about 2.2 million mortgages versus, versus 800 and something mortgages here, right? So very cool. All right. If you have any questions, any concerns, do call me. My cell phone is right back up here again. It's on our website too. There is my cell phone right there. So do call me. All right. If you have any questions, I will try and help where I can. All right. Well, thank you so much. We'll see you on the 28th of March. Have yourself a great night. Bye-bye.